Today, we're diving into the firms producing the next generation of tech in quantum, drones, robots, nuclear, and more. 10 stocks, most of them under $40, some under $5. Remember, this content is for educational and informative purposes only and should not be construed as financial advice or a suggestion to purchase or sell any securities. So, we will start with Momentus, ticker symbol MNTS. Momentus makes orbital transfer vehicles, which are space tugs that relocate satellites from one orbit to another once they have been launched. The startup basically aims to become the FedEx of orbit, repositioning packages using a water plasma propulsion engine, and they have the demonstrations in space to demonstrate to firms how it is done. The company is a $6 million market cap corporation. Last quarter, we earned $234,000 in revenue. So they're burning cash right now. The stock has plunged 87% during the past year. Why is it even on this list? If the space economy takes off as expected, the infrastructure layer of space is going to need enterprises like these because... Now, it's a long shot, but at $4 a share, you're not spending much for that lottery ticket. Second is Brand Engagement Network, BNAI. BNAI builds talking avatars driven by AI. Think Lifelight, a digital assistant for automobile dealerships, healthcare, and customer service. The stock climbed from under $3 to an intraday high of more than $86 back in January. For Q3, revenue was only $60,000. Market valuation is about $180 million. This one has over 21% short interest and light analyst attention. So what's the growth story? AI avatars and virtual agents are indeed becoming a genuine growth catalyst as organizations strive to automate consumer interactions without sacrificing that human feel. BNAI's patented technology integrates natural language processing with sentiment analysis and real-time customization. If they can translate that technology into real contracts, the revenue ramp from this limited base might be dramatic. And number 3 is Photronics, ticker PLAB. They manufacture photomasks, the physical templates used to etch circuit designs onto silicone wafers during chip production. Photronics sells what every advanced chip needs. It's not a startup. It's a firm with $2 billion in assets, $849 million in annual sales, $190 million in net profits, and almost $500 million in cash. And their stock rallied 45% on their last earnings, beating and touched a 52-week high recently. Analysts have a moderate buy consensus with a 46.50 target, roughly 35% upside. This one is at 88% institutional ownership today. It is a cash-rich key infrastructure corporation that benefits from every single AI chip that gets produced. Number 4, Richter Robotics, ticker RR. Remember Rosie from the Jetsons? Well, this company is about building the genuine stuff. Service and humanoid robots for restaurants, hotels, casinos, and even hospitals. Their Atom robot serves drinks. Their mattress provides nourishment. The business also just revealed Dex, a humanoid robot that's garnering a lot of interest. Revenue during the last quarter was $1.4 million. The market cap is around $500 million. The stock is under 250 right now and has a 52-week range that runs up to 743. So there's a lot of instability here too. The company has one $6 price objective, but there is a short report and securities investigation hanging over the stock, and the short interest is above 28%. That's a lot of people betting against this stock. The bull case is straightforward now. Robotics could be the next huge growth area after AI, and Rich Tech is one of the few pure-play public businesses that are focusing on commercial service robots. If this category takes off, a company already providing real things to real customers has an advantage, but the headline risk here is substantial. Make sure to subscribe to our channel. It helps us grow and pushes us to provide you with more valuable stock market content. Thanks for your support. All right, back to this list. Number 5, another pretty fascinating name, SEALSQ, ticker LAS. SEALSQ is actually constructing the locks that guard against quantum computers, so the company is a post-quantum security chip firm. The business has developed the first secure chip to put quantum-resistant encryption directly into hardware. And timing is everything here. The U.S. government has mandated that all national security systems must use quantum-resistant solutions by 2027. Not too far away with a full switch set for 2035. SEALSQ revenue of $18 million with 66% growth in 2025. Their pipeline from 2026 to 2028 is estimated at $200 million. They also have over $425 million in cash, and their chips are already used in millions of devices through joint ventures with defense and other industry customers. The stock is trading under $3, significantly below its 52-week high of $871. One analyst did come out recently with an overweight rating and a $7 target, which is more than 130% upside. And number 6 is nuclear power, ticker NNE. And if there is one bottleneck that might hold back the entire AI revolution, it's power. Data centers require vast quantities of dependable, continuous power, and the grid simply can't deliver. Developing a solution for nuclear energy. Portable microreactors are to be installed wherever power is required. They're exploring 2 different reactor designs: Zeus, a solid-core battery reactor, and Odin, a low-pressure coolant reactor. Neither is in commercial production yet, therefore this is a pre-revenue play. The company had basically zero revenue last year and burnt roughly $40 million, but they had $578 million in cash on the balance sheet as of last quarter, and they're actively investing in development. Analysts are enthusiastic here as well. The consensus price goal is $47, which is more than 100% higher than its current price. Stock has had a lot of volatility. 52-week range, 17 to 61. Short interest is nearing 40%. But the cash situation offers them runway, and the energy barrier for AI is not going away. And number 7 is VEL 3D, ticker V. VEL 3D makes metal 3D printers, but not the kind you think of. These devices print mission-critical parts for rocket engines, jet turbines, and other defense systems. Their customer list includes Honeywell, Lam Technologies, and SpaceX. They can print metal structures that traditional factories can't make, like cooling channels within a rocket nozzle, all in one piece instead of welded together from dozens of parts. And that is a big advantage for this organization. But the stock has had a hard couple of years, bouncing back up nearly 60% in the past month and 50% over the past year. Market valuation is $370 million. They have a consensus buy rating with a $20 price goal. 3D printed metal parts for space and military are a real market that's expanding quickly, and VEL 3D already has the partnerships and the technology to scale with it. Number 8, Skywater Technology, SKYT. Skywater is a semiconductor foundry in the US, and in a world where everyone is talking about bringing chip making back to America, that matters quite a bit. They are focused on high dependability processors for defense, aerospace, and quantum computing customers. And that quantum bit, that's what's really heating up. Skywater reported record income from quantum computing customers last year. IonQ, one of the largest names in quantum, actually announced plans to acquire Skywater, which tells you everything you need to know about how crucial their manufacturing capabilities are becoming. Skywater is a foundry at the crossroads of 2 of the strongest trends in innovation. You have quantum computing and semiconductor reshoring, and they are already making real money doing it. 9, Xenotech Xena, ticker Xena. This is a microcap under $3 developing AI-powered drones for commercial purposes, land surveys, agricultural inspection, and, of course, defense. They are based out of Canada, but they are aggressively growing into the US, particularly around the DC metro region for those major federal contracts. The company had a little more than $3 million in revenue in the latest quarter and a market cap of roughly $51 million. Maximum Group has commenced coverage with a buy rating and a $9 price target, implying around 300% upside from present levels. But the stock has been dropping recently, down approximately 29% year to date. If Xenotech can acquire large government contracts and develop their drone as a service platform, the revenue trajectory from a base this tiny might be meaningful. Okay, and at 10 in our share list, the business builds robots that stress test AI chips before they get in the data center. All the hyperscalers, all the companies developing huge GPU clusters for AI training need to be sure the chips truly perform under harsh conditions before they put them in, because swapping a bad chip in a live data center is insanely expensive. The business scans wafers, not just individual chips, but entire wafers, under high temperature and high voltage circumstances, finding any faulty die before it leaves the factory. The company also received a follow-up order from hyperscalers last year. A top AI process supplier is examining their technology for possible purchase. Market valuation is slightly over $1 billion, 52-week range from $627 all the way up to about $47. So this stock can really run. All the big chip companies are making bespoke silicon. Each data center is getting thousands of GPUs, and every one of those chips must be examined and validated before going into the field. It's the most bullish play on AI hardware quality, picks and shovels. The stock is Air Test Systems, ticker symbol AER. All of these are dangerous too. They will require some research on your part, but are good ideas to check into. Please remember to like the video and subscribe to the channel.